So up next, we have HyTerra with the ticker code HYT. The company is focused on the exploration and production of natural hydrogen in the Midwest of the United States. HyTerra is employing a data-driven approach to exploration natural hydrogen resources. I will hand you over to Executive Director Ben Mee to tell you more.
First of all, I'd like to thank Alpine and JMM Morgan Management for this opportunity, and thanks for the viewers here to listen to these ASX companies and their great projects. Peru looks really exciting, to be frank, Alan. Look, I'm going to elaborate on 3 key points today. Why companies are pursuing white hydrogen aggressively around the world, how HyTerra is very well positioned in the US to realize value for our shareholders, and finally, where HyTerra is today and where it could be very shortly. Next slide, thanks. I'll take the disclosure opportunity to introduce myself a little bit more, maybe, or we can move on. Look, I'm an executive director for HyTerra. About 25 years in oil and gas, half Woodside, half Shell, half onshore, half offshore. A lot of deep technical skills, geology, geophysics, QI, and then some management in unconventionals, deep water, offshore, corporate strategy for 3 years in Shell in M&A and D. D means divestment. And then finished up as exploration manager for Egypt for Shell, and the rest of Africa, South Africa, South Sudan, Mauritania, and then Namibia, which drilled some pretty exciting wells back in the day. Look, but I'm here today to talk about hydrogen. Hydrogen is one of the world's wonder element. It really packs a punch from being a pure reactive chemical energy, and it touches all of our lives. It makes materials, makes steel, make food, make fuel. And we all need it, but basically you can't electrify everything. And actually, probably people don't maybe realize this, but only 20% of the energy that we use today actually comes through electricity. So molecules are here to stay. The issue is that 99% point something of hydrogen comes from fossil oil and gas. So a replacement for this must not only compete in terms of carbon, but a real alternative must be similar in terms of cost of supply, if not cheaper. Next slide, thanks. So we've seen all these colors. I'm just going to pick on 4 of them. And these colors really reflect how things are made, not really its attributes. So let's just dive one level deeper into the attributes. And on the left-hand side, that's 4 colors with carbon intensity. And I'll just summarize it for you. White and green is their great alternative to gray and blue, hands down. But on the right-hand side, that's a cost of supply with a range on it, because things are changing daily. But something is low carbon and very cost competitive today, potentially, and that is white hydrogen. And actually, white could go up against fossil-derived hydrogen, which is grey, while the rest of the colours are all going down in cost over time. They'll come down because it's all hands on deck. They should come down. But it means any commercial projects today in the short term will be robust from day one. Because in my background, as I mentioned, lowest cost producer wins the short game, and now lowest carbon wins the long game. But let's be balanced here, and I'll bring my experience a little bit into this. The countries will use what is basically under their ground. There'll be oil for some, gas for others, there'll be heat, there's water, and now there's hydrogen. But before you go build a green hydrogen plant or take those emissions that are generated and inject them into CO2, because they're quite costly exercises, just make sure nature hasn't made it for you underneath your feet. Next slide, thanks. So why is hydrogen so cheap? I'll do it with a very, very simple geological model, but it's a predictive model. It's basically cheap because nature makes it for you. It's very expensive to break the bond at surface, and we can extract it using conventional techniques. So here's a 3D diagram. The Rocky Mountains, where we, well, not me, but some people ski and snowboard on a regular basis. Well, that's the water. That's the source of the hydrogen. And the water comes in, it melts, comes into the ground, goes into these very well-mapped aquifers. There's quite a few of them that move towards the Mississippi River. So there's a moving, working hydraulic system. Now, as that water passes over granites, it reacts, it produces a bit of helium, picks it up on the water. But when it hits this kind of orange thing in the middle there, I don't know if people can see that, it's sort of brown or orange, that's a mid-continental rift. And that's quite pervasive in America. America basically tried to split 1 billion years ago, and it failed. It should have kept splitting into 2 continents, but actually it stopped. But what happens is all this beautiful iron-rich material comes up pretty close to surface. And when the water hits that, it wants to rust. It wants to serpentinize. The iron-rich rocks take the oxide and say, thank you, it reduces the H. The H is very light. It goes up. And right above it are wells with hydrogen and helium occurrences, which makes sense. That's the predictive geological model. That's a model. There's quite a few. And then guess what? We have these wells in our leases. Next slide, thanks. So HyTerra is in the Midwest USA. We're basically exploring for white hydrogen and helium resources near major industrial hubs. We've got about 12,840 acres today by quarterly, but we're leasing every given day. And within these leases, we've got occurrences of hydrogen and helium in them, some with very high readings of hydrogen and very, very economical readings of helium. And we've got often surrounded by off-takers, which is fantastic. Ammonia plants, producers, and they're connected to existing transport infrastructure. I mean, that map on the right-hand side, that if I put the roads in there, you wouldn't see it, right? It's that congested. So everything's connected. But 25% of America's ammonia is made around us, right? We're sitting in the middle of an agricultural hub. Next slide, thanks. What's equally important is clay. And you heard that with the Peru one before me. You need clay diversity. You need different types of clays. Here we've got different stratigraphy. We've got shallow, we've got deep, we've got helium, we've got hydrogen. We've got wells that are existing already that have been drilled that can be twinned. We've got wells that can be new and be drilled quite cheaply. So it's really important to have clay diversity. You do not want one well and that's it, right? What you want is several wells. And the reason for that, from my experience, is that that's what drives commercial success. Early commercialization is the fact you drilled it up and you got that front-end data loaded into your computer and you can understand where to put a pilot. Next slide, thanks. Let's dive into a few of these wells. I mentioned there's a couple in our leases. One of them is Scott 1. It was drilled in 1982, so a while ago, and they were looking for oil and gas, and they stopped, as you can see there on the right-hand side, the red dot. We could twin that well. If we did, we'd drill it twice as deep because there's exploration upside underneath it and the continuation of that sedge and into the basement, which they didn't penetrate. But that well found up to 56% hydrogen and the rest was basically nitrogen. No CO2 and no methane, all less than 1%. These are carbon-free gas wells, guys. What's also interesting about that is they've come back, and this is published, they've come back on different occasions and sampled these wells, and they continuously found hydrogen every time they sampled, which is great. On the left-hand side, there is Cedar Roach 2. That's more recent. That was drilled in 2009. They were looking for hydrogen at that point in time. We're not the first explorers in the area. And on the right-hand side, you can see there, well, next to it, you can see we could twin that as well. That found a massive amount of, recorded massive amount of occurrences of hydrogen up to 92%, but it found some helium up to 3%. And where we are, that's very economic. So what we would do is we could potentially twin that well, and then we could go deeper as well into the basin and see what we get. Okay, these are permitted, by the way, these well sites, and we're continuing to permit other well sites. Again, we have this clay diversity. Next slide, thanks. The board and management team, very simply, we have for many, many years here, some are 25, some 10, some 40, some 15, get after carbon gas fields. And we've developed them commercially and made money for those shareholders. Our job today is to develop carbon-free gas fields with hydrogen, helium, nitrogen. By the way, hydrogen and nitrogen is the equation to fertilizer made for free by the earth, and get them up to surface and get them to market. So we have explorers, appraisers, developers, producers, executors, operations, and a tremendous breadth of creative thinking here through this. Performance is great and milestones are true, but the true value that I've ever seen out of anything came from creativity, and that's the team that we have today. Next slide, thanks. Now, the third topic I brought up was where is HyTerra today and where it could be very shortly. And it's very exciting to say that last week we announced that Fortescue will take a strategic interest in HyTerra and inject just under 22 million Australian dollars, subject to shareholder approval. And an investment like this in Fortescue means we can aggressively pursue white hydrogen to accelerate our global decarbonisation efforts. And this is a real boost in confidence for us. It puts pride in our team. It's kind of well done to the team of HyTerra to get to this point. But we're onto something special here. We really believe that we're passionate about it. We've got the right folks on it, and we're competitively advantaged, and we want to stay that way for years to come. So with this, you would have a fully funded, expansive exploration program of the NEMA Hub project in Kansas, subject to HyTerra, shareholder approval. Would be funded for a very long time. So within this, what that basically means is we could triple our leasing. We lease every day, but we'll triple it. We require more geophysical surveys, which is very important. Instead of 2 wells, it gets 6. Again, we triple the well count. A venture decision on Geneva, which is our Nebraska project, that will just go as planned, a venture decision. And equally, what would be happening with Fortescue, potentially subject to shareholder approval, is we would set up a strategic alliance to review the current projects to maximize value out of it, but also where else in the world we'd like to play. And if warranted, where we would invest. It's very exciting times. But let me be frank. We'll keep doing what we do every day. We lease every day. We're planning to drill locations every day. We're getting ready to drill every day. Our 2-well program, we're just about to drill in coming days, will now be deferred to after the subscription agreement, which is just running its course. Now the subscription agreement would be expected in Q4 this year to finalise. And again, we would increase our drilling campaign from 2 wells to 6, which is incredible. So potential impact on a work program in sight in 2024. So final slide, thanks. Really briefly, we're very well positioned to strike. We've got the right rocks in the great jurisdiction. We believe the Midwest is the place to be. Kansas is where we start. Lots of plays to tackle, lots of great wells to drill, different revenue sources, hydrogen, helium, connected to markets by existing transport infrastructure. And subject to shareholder approval, we could have a major strategic investor in Fortescue who could really accelerate our journey to commercialization and be that global hydrogen player quicker. So it's exciting times at HyTerra, but it's only the beginning. Thanks for your time.
Ben, what a great presentation. Thank you so much for that. I'll just jump into some questions now. I'll get you to stop sharing. Perfect. So you did mention the large strategic investment by Fortescue for roughly 22 mil. So congratulations. Look, are there any other larger players making similar investments in the region? And if so, who?
Not that I'm aware of. What I'm noticing out there, of course, similar to probably previous, is they're watching quite heavily. So I wouldn't be surprised if this would be a start of something. And I very much hope so for the other companies. We had some very good feedback last week. I had to charge my mobile 3 times on Wednesday or Thursday, I can't remember which day it was. But lots of incoming to say thanks. You know, this really helps us boost our confidence with people that we're speaking to. So great outcome potentially subject to shareholder approval, of course, but great for a nascent industry like this to get after. Thanks.
Wonderful. So next one, what data should we be looking out for in the upcoming drilling results? And beyond the drilling campaign, what is the company looking to focus on?
The number one focus is always achieving commercial flow rates. That's no different for us as it is for any oil, any gas, any heat. That's what we're focusing on. So our job in these wells is to collect the right information to underpin what would we do in the appraisal phase, where would we appraise, and then where would we pilot. Now it's a little bit unique. So we've spent a lot of quality time with some quality folks around the world, making sure that we collect the right information. It took us about a year and a half to kind of think this through, but we're poised to do so.
And just further to that then, so what are the main objectives of the drilling campaign and at what depths will the 2 wells be drilled at?
Right. Well, hopefully there's 6, not 2, and maybe they'll be phased. Let's see. But if we get that injection capital as well and that support from Fortescue, yeah, we'll pick. The great thing about it is that we currently are working up different drilling locations. Some are shallow, some are deep, some have different objectives, some have new objectives. So there's a range of plays to get after. There's different risks, different killer risks that we're trying to de-risk. There's lots. We could twin. we could move out to something brand new. There's so much selection here. So closer to the time, like we would have indeed mentioned what we're going to drill, but because there's a deferral now, just given this kind of strategic investment, we've got time to put that storyline together. But all the wells are exciting from my perspective.
Wonderful. Well, Ben, congratulations again, and thank you for joining us today. What a great presentation.
Yeah, thank you so much, everyone, and thanks for your time to listen.